When we analyze the type of market that we're in, there's pretty much only one thing that we can say for certain. No one knows exactly what's going to happen next. The one thing that we do know is that it will be volatile. As a lot of you guys know, I've dedicated a good portion of my life to learning the art of investing, and I will say this: there's always opportunities in the markets, and that's the reason why I'm making this video. I want to show you where I see potential opportunity for this volatile, weird market that we are in. I've got 7 stocks that I need to show you guys. Now, for each of these stocks, I've got very specific reasons for owning them, so pay careful attention. Now, I just want to say off the bat, do your own research before you purchase any of these stocks. Don't be that guy who just buys it and doesn't even understand what they own. At the end of the day, if you do that, you will lose. Let's kick this off. Warren Buffett, my opinion, the greatest investor of all time. However, these days, a lot of people are saying he's lost his touch. They're saying this is the new era of investing, where times have changed and things like social media and the internet have taken over. They think now Cathie Wood is the new top investor. However, I'll say this: never write off Warren Buffett and his company Berkshire Hathaway. Don't forget, do your history homework. They said the same thing about Buffett and his company back in the late 90s. They said it's the dot-com era now, and value investing stocks like Berkshire are not the way of the future. Then what happened? Berkshire grew to be one of the biggest companies in the world. It's now valued at over $500 billion. If you want to buy a piece of this great company, its price is just under $220 per share. Also, another thing to remember is that Buffett's company thrives generally through the tougher times. You know, Buffett, he's a more conservative investor, so maybe he hasn't done as well as high growth investors have during this bull market, but I think over the next 10 years, Berkshire will be in a market where they thrive. Buffett's certainly done this numerous times in the past, and his value investing strategy over time beats the market. This is a company that I really like over the next 5, 10, 15 years time, especially with the unique economy that we're in. You see, Upwork is a place where businesses go to hire online and people go to work online. Now, think about it. How many jobs can now be done simply through the internet? A lot of careers these days, you don't need to go to an office 9 to 5. No, you can just do it from home. And we've seen this especially with the lockdown and the amount of people who can do their work simply through a computer. Now, Upwork is a company that is dramatically benefiting from this change. They're the ones you go to if you're looking for a job online, and they get a certain cut of the revenue. This is why I could see Upwork being a lot bigger company than it is today in the future. Upwork sells for pretty much $15 a share. Their market cap is $1.8 billion, so they're nowhere near the size of those big tech giants. But they do have the potential of being one in the future. So there's high potential reward. Now, I've been studying China a fair amount recently, and you can't deny they're a fast-growing country when it comes to economics and business. Ray Dalio, he's noticed the exact same pattern as me. In fact, he went as far as writing an article titled The New World Order, where China becomes the global superpower. Now, whether China becomes the global superpower, okay, that's something to be debated back and forth, but nevertheless, I want a piece of China's growth. And we can all do this through owning Chinese stocks. One of my favorite stocks in China goes by the name of Alibaba. They obviously own the largest e-commerce business in China and Asia. They own Taobao and Tmall, which is e-commerce based directly in China, but they also own Lazada, which dominates throughout Asia, and they own AliExpress, which is their worldwide platform. So in a way, they're kind of like the Amazon of China. But people forget they're a lot more than this. Alibaba is rated the 5th largest artificial intelligence company. They own Alipay, which is kind of like China's version of PayPal. They own Youku, which is similar to China's version of YouTube. Along with this, they own a bunch more. We don't have the time to mention them all. So they're a well-diversified business spread throughout China. At the moment, they're selling for $278 per share. I bought in just under $200, but even at this current price, I still think they're a buy. They've got a lot more potential for growth as China grows as a country. One of the type of companies I look for in these particular market conditions is reliable ones, stable ones, ones with strong business models. PepsiCo, I believe, fits that criteria. You see, PepsiCo, they own more than just the brand Pepsi. They own multiple billion-dollar brands. We're talking the likes of Doritos, Lay's, Cheetos, Gatorade. These are big brands that PepsiCo owns that diversifies them across the food and beverage niche. Now, even if, let's say, the market were to crash, people, consumers, still need to eat and drink. It's highly likely that they're going to continue to keep buying the brands that PepsiCo owns. The stock goes for $135 per share currently, and the nice thing about them is they pay a 3% dividend yield, which, by the way, that dividend is pretty trustworthy. They've increased it for 48 consecutive years in a row. It didn't matter what the stock market was doing. The next stock that I'm going to show you has a lot of potential, but it's also risky. So the stock I'm talking about is Slack. Now, Slack is a company that has developed a new form of online communication. It's predominantly for workplace communication, and I gotta say, it's a lot better than email. Now, if you think about it, email's getting old. It's almost 50 years old, and it's not the easiest form of communication, let's be honest. Slack is looking to replace email, and they're doing a pretty good job at it. There is over 750,000 companies that use Slack, and it's fast growing. Paid customers in the first quarter of this year went up 122,000, which has increased 28% from the previous year's quarter. Now, the thing I like to say about this stock is high risk, but the potential reward is massive. You know, one of the great modern day investors last year, Chamath Palihapitiya, said that he only likes two enterprise companies, Zoom and Slack. So he said that in 2019. Now, we all know what happened to Zoom this year. It's now known worldwide, and Slack also has the same potential. So, Slack stock comes under the ticker symbol WORK, and they're not expensive at all. They're $25 a share right now, down from their all-time high of $35. As you can see, their market cap is $14.5 billion currently. Now, their CEO thinks they have the potential to be as big as Microsoft. If they can achieve this goal, they can go up by over 100 times. Okay, that's a lot of profit. And this is what I'm talking about when I say, you know, it's risky, but there's high potential reward. This is a stock that I bought a while back, and I still like it to this day. And when I say a stock, I mean an ETF. It goes under the ticker symbol GLD. And basically what GLD is it's a trust that tracks the price of gold through owning over 24,000 ounces of gold in its custody. By the way, Ray Dalio, he owns the same ETF as well. Now, as I said at the start of this video, we're in volatile times, and there's no question about it. One asset that I do not mind owning at all during volatile times is gold. Gold is known worldwide as a symbol of safety and a symbol of wealth. As Robert Kiyosaki said, commodities such as gold and silver have a worldwide market that transcends national borders, politics, religions, and race. I personally use this investment as a way of tightening up my portfolio. If stocks crash, if things go bad, I'm still holding gold, which is known to do well when everyone's panicking. At the moment, you can buy into this gold trust at just over $180 per share, and as you can see, it's done quite well during this volatile year. Stocks have gone nowhere, but GLD has gone up. We started with Buffett, so we'll end with Buffett. Warren Buffett's Berkshire Hathaway is buying the stock, the Kroger Company. Okay, I've mentioned this several times, but over the last quarter, Buffett made 22 stock moves. Only 5 of those were stock buys. Now, one of those buys was Kroger stock, which is my favorite out of the 5 that he's buying. Now, Kroger, it's the largest supermarket in the United States, at least in terms of revenue. Now, this buy I would consider a reasonably safe one in this current market because people still need food even in a recession. Price-wise, it's not too bad, currently selling for $32 a share. Buffett bought at the time when it was selling for around that $30 mark as well. They pay a nice dividend, 2.2%, and that PE ratio is a lot lower than most stocks in this market. It's only 12.3. So I'm sure I'm going to get a lot of people asking me, Cooper, it's so volatile on the stock market right now. I'm very wary on buying any stocks. And okay, there's nothing overly wrong with that approach, except if you end up waiting for a market crash and for the volatility to stop, you might be waiting 5 or 10 years. This is why I think a good approach is to tactically pick a few stocks that offer value, like Buffett is doing, because you have to remember that there's always opportunity in every market.